It doesn't mean straight up. It doesn't mean parabolic up. More likely, it means a drifting up with volatility until we get to summer, crypto summer, usually 9 months ahead of the halving. And then we can get to the next parabolic move. Ended June 14th this year. So we are in crypto spring. Now, there's 4 seasons, right, of crypto, and it's all based around the Bitcoin halving cycle, and all the other digital assets follow that cycle. It's one of the most genius things ever created in code, and you know, that's a big statement. And look, I'm prone to hyperbole, okay, so you got to get used to that. But this actually isn't hyperbole. You think about what they did with the halving. So every 4 years, you cut the number of block rewards in half. Why does that matter? Well, it is basically a number go up system. Well, why does that matter? Well, if you want to get people's attention, things have to move. Now, it's sexist, and you're not supposed to say it, it's non-politically correct, but it's like guys, right? If it ain't moving, we don't see it. My wife says, go get the ketchup. I open the door, honey, there's no ketchup. She walks up, grabs the ketchup bottle. It doesn't move it, so I can't see it. So that's just the way it is. And so every 4 years, you cut the number of block rewards, but the miner's electricity cost is fixed. So unless the price rises, they go out of business. So the price is a built-in rise. And then as it starts to rise, right, as we get back toward fair value, then the traders come in. Then the speculators come in. Unfortunately, in crypto summer, the gamblers come in. And that's where we get this parabolic blow off top, and then we get a crash. And so that takes us back to winter. And so this natural cleansing, winter's good. It gets rid of all the bad projects. It gets rid of all the leverage. We had way too much leverage in this cycle. And that got cleansed, and it got wiped out with the 3 Arrows Capital liquidation. And so on June 14th, you know, we had that wick down to 17.5 in Bitcoin, and everything else followed. That was it. And now we've had a series of higher lows and higher highs. We're in an accumulative process. And that means we're still gonna have volatility, because all volatility is disagreement over future prospects of anything, right? None of us know for certain what any of these projects are gonna be, whether it's Bitcoin, whether it's Ethereum, whether it's Algorand, whether it's XRP. We don't know with certainty. So because we don't know with certainty, some people are gonna be bullish, some people are gonna be bearish. That's what creates markets. And so that's a long-winded way of saying winter's over, spring has sprung. It doesn't mean straight up. It doesn't mean parabolic up. More likely, it means a drifting up with volatility until we get to summer, crypto summer, usually 9 months ahead of the halving. And then we can get to the next parabolic move because of greed and fear. You showed the greed and fear index. Well, what happens, right? Bitcoin and other assets follow Metcalfe's law. Right? We can actually determine the value of any network. Apple is a network, Amazon is a network, Meta is a network, Bitcoin is a network, Ethereum is a network, XR, all of them are networks. They all follow Metcalfe's law. So we can model with pretty good certainty what the value of a network is. But that's not the price. The price is a liar. Price is just what 2 people agree to exchange a small amount of good or service. So that price can differ from fair value. Look at stock market. The stock market today, total stock market, is way overvalued, right? The fair value is about 50% lower than where we are. Despite the correction, okay, we're still 50% to get to fair value. But we don't spend much time at fair value. We're either way above fair value greed or way below fair value fear. You know, stocks should rise over the long term, about 6%. They pay dividends and there's growth. Same thing with crypto. Let's take Bitcoin. Bitcoin's value today, fair value, 32, 33K. Where does that come from? N Squared Crypto, Tim Peterson, great Metcalfe's Law model with the right decay curve, decay factor. But we're well below that. We were well above that. Well, how do we get way above that? Well, when we got to fair value back at 28, 29,000 last year, we started to go through it. Then the speculators came in. Then the degenerate gamblers came in, the people with leverage. That pushed it to 69, and then it collapses. And why did it collapse? It collapsed because of BlackRock and all the banksters and futures, right? If you look at the peak of the market, it was 6 days after the launch of the Bitcoin futures ETF. Why does that matter? It's the same reason. And Abs, you have that chart of that tweet about gold?
Yep, I'll pull that up right now.
Yeah. So here's the interesting thing about gold. 100%, it's absolutely essential to compare Bitcoin to gold because Bitcoin is digital gold. Why? Gold is money. It's the only money in the world. There's no other money in the world. What is money? Money is an asset that exists in the absence of a liability. Everything else is currency or credit. It's backed by debt. Dollars are not money, they're currency. Yen, currency. Renminbi, currency. The only asset in the whole world that exists in the absence of a liability is gold. And for 5,000 years, it has been money. 1 ounce buys a fine person's suit. No one wears suits anymore, but if you did want to wear a suit, you would go to Savile Row, you'd put down $1,800 and you'd get a suit. Great. In Cleopatra's times, 1 ounce of gold, fine person's suit, right? And in, zoot suit in the 20s, same thing. So gold has been the perfect currency, but the problem with gold, I'm a big movie guy. Anyone seen the movie Knight's Tale? Right? Awesome movie, Heath Ledger, jousting. Yeah. Oh, Abs, you got to watch it this weekend. It's great. Amazing movie. I've seen it 50 times. Love this movie. But he wins his first tournament and he gets this gold horse, right, as a prize. And he's got to bail out his page, Chaucer, who's, lost a bunch of money gambling. And he literally bangs the thing off, breaks off a leg and says, go do what you do with this. That's a really bad way to divide gold. If I wanted to send you gold, if I had a gold bar here and I wanted to send you each 25% of it, how would I do that? I can't bang it on the table and break it into 4 pieces. That's not going to happen. I can't send it through my computer. It's just a crappy way to have money, but it has been money for 5,000 years. Bitcoin comes along. It's as scarce as gold based on stock to flow. And that is a real concept. The model problems, but the concept is real. And so scarcity creates value. You quoted at the beginning that the Fed, right? And I have strong views on the Fed. ETF. ETF doesn't stand for electronic funds. It's end the Fed. The Fed is a horrible institution. It was designed to steal wealth from us and give it to them. That's what it was designed to do. That's why the all-seeing eye is a pyramid. It all goes to the top. The Fed was created by the rich people, right? The Rothschilds in cahoots with J.P. Morgan and John D. Rockefeller. John D. Rockefeller's father was a very powerful senator named Amory Aldrich. And the Aldrich plan was created to create the Fed, which was modeled on the Bank of England, which was created by the Rothschild clan that was modeled on the Netherlands Central Bank from 1607, the original Rothschild clan founded, that they used to finance their wars. Central banking has existed for hundreds of years to steal wealth from the masses and give it to the few. So the Fed did the same thing. So what did the Fed do? The Fed has created money out of thin air, devaluing everything that we care about. Right? I use the example of gas. I paid 33 cents when I was growing up. You guys are young, I'm old. Okay, white hair. 33 cents for a gallon of gas. Paid over $5 for a gallon the other day. Same gallon, does the same thing, same amount of heat in the engine. It's actually a little less because it's got ethanol. It's not because the gas is better, it's because the dollar's worse. And, Jay Leno, the comedian, again, you guys don't know who that is, but, old guys like us know Jay Leno. And I'm just kidding. And, Jay Leno had this thing. He's like, I heard they were going to make a dollar coin. Well, they already have. It's called a nickel. And that's what a dollar's worth. In 1920, you could buy 20 Snickers bars for $1. 20. Today, you can get about half of a Snickers bar. So it's that devaluation of the currency, but it happens slowly. It's like boiling a frog, right? If you turn up the heat and you drop a frog in, it jumps out. If you put him in and turn up the heat slowly, this is awesome. And then when it gets so hot, he wants to jump out, he's paralyzed. And that's what we all are. We're all paralyzed in this state of dependency on the overlords, the WEF and the governments, to, Johnny, not Johnny, am I blanking on his name? The guy who wears the cowboy hat, Jimmy Song. Jimmy talks about this all the time, right? If you live in a fiat world, you're a slave. Again, not politically correct to use that word, but we are all slaves if we are paid in fiat, which then can be devalued away from us. And CBDCs are like evil incarnate. I mean, they take fiat and weaponize it. I mean, and if you haven't seen the 2 minutes from Augustine, whatever his name is, the guy from BIS, Jabba, I used to call him Jabba the Hutt. And I realized, no, he looks like Kingpin from the not the metaverse, but the multiverse, Spider-Man movie. But he looks like Kingpin. This guy's like 400 pounds, and he's got this giant head, and he's saying, well, of course we should control the money. Of course we should be able to determine if you don't spend your money by Friday, we can take it away. Of course we should be able to turn off or on where you spend it. Imagine this. Imagine you get paid on Friday. You have a couple cocktails, you drunk tweet about the president. You wake up and your money's worth 80 cents on the dollar. What the fuck? Well, what? Programmable money, which is coming, so CBDC is, that's happening. So anyway,